Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Tuesday, March 19th, 5:23 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend going all the way back to the beginning of November of last year. If you check the trend gauge over here, we've got the coveted 4 green arrows, yellow sub arrow on leadership, as we have seen some leaders come under pressure. Still quite a few holding up above the 21-day, several breaking the 21 and bouncing at the 50-day. That's good news. We'll talk about a classic case of that when we review the charts today. Small caps, 4 closes beneath the 21-day moving average, and the slope of the line has rolled over. So we've got small caps under bearish, thus bringing out the yellow arrow. Yesterday, we also had the Dow and the NASDAQ 100, the QQQ, under the 21-day moving average, but they reclaimed it today. As far as the medium-term 50-day moving average and long-term 200-day moving average go, all 5 of the indexes above those levels. So what happened today? We were weak pre-market and opened with the S&P down about 0.2, NASDAQ and small caps down about 0.5%, based for about an hour, and then a late morning and lunchtime rally, basically a trend up before pausing early afternoon, going sideways, and then another small spurt up into the close. All green on the indexes, S&P 500 at an all-time high close. Big day tomorrow with the FOMC decision on interest rates. There's virtually no chance that they're going to make any changes. The question is, what will the statement, the statement from the FOMC, what will Powell's opening statement, and then what will come out at the press conference? There's always a lot of fireworks, and there's a lot of crosswinds between what appears to be weakening employment coupled with slightly rising inflation. Market looking for some direction from Jay Powell tomorrow. We'll see what happens. Here are the numbers on the day. The Big 7 up 0.6%. RG8 lagging up only 0.2%, and the FFTY, that's the IBD 50 leaders, and ARK-K were both negative. My screen shows about 50-50 between leaders being up and leaders being down. S&P 500, as I said, opened down 0.2, rallied, closed up 0.56, equal weight, in line with that. NASDAQ 100 up 0.25%, equal weight, up slightly more than that. Dow was the leader today, up 0.8. Mid caps up 0.75. Russell 2000 small caps up a little more than 0.5%. Global diversified 60/40 stock and bond up 0.27%. In-house GROTECTION up 0.28%. We'll touch on the charts, see what led and what lagged today there. Let's get into it. Start off with the S&P 500. Opened with a little gap down that put us below the 8-day moving average. That's the thin purple line. But then let's look at the 5-minute chart here. Here's your 1-hour base. And then kicking off a rally, hit 51.74, pulled back a little bit, based for a couple of hours, a little bit of a pullback, but then a strong close. Where does that put us overall? Well, we're at the top of the range. This range is really a 19-day consolidation, with the all-time high before reversing being a week and a half ago at 51.89, but making a push into that with the FOMC on deck. And we'll have to see how that decision plays out. Let's go to the NASDAQ 100. We've still got this very clear declining tops trend line. And this is the reason I'm seeing a lot of people call for a top out there. Leadership has, especially tech leadership, has unquestionably pulled back over the last 2 weeks. And some people look at only the NASDAQ. We don't. We recognize the value of the sector rotation within the S&P 500. From growth to value and from sector to sector, and that's why we use that as a foundation for our portfolios. But if you're just drawing lines, you can see this triangle on the NASDAQ 100, key support under the lows from last Friday and today's lows. corresponds with the low of the gap up day and the lows from about 2.5 weeks ago. And then you got the declining tops trend line. Would not be surprised with the Fed tomorrow to see a break above, a break below, or maybe a break below first and then a break above, as the Fed days are just prone for trapping, and we, for the most part, stick with what we have and stay out of the way unless there's a massive, overwhelming move to one side. Let's go to the Dow. You see the nice big positive candle up 0.83%, putting some space between it and the 21-day moving average. Let's go to mid caps. Four tight closes here for mid caps. Just a nice little consolidation above the 21-day moving average. Tight consolidation for small caps too, but below the declining 21-day moving average, unable to get above it each of the last 3 days, despite challenging it, but closing very near the top of the range today, undercutting this 200 level early and getting back above it. Note the relative weakness in small caps over the past 2 weeks. So the 5 major indexes, let's check the VIX. The VIX was down all day today. A little surprising with the FOMC tomorrow, but we're below this key 15 level, which is what we want to see, and below the 200-day declining 200-day moving average. Onto the dollar. Dollar strength, not good for stocks. But in the face of a strong dollar today, up 0.37%, we saw stocks rally anyway. We've pointed out that this rally in the dollar, possible headwind for the precious metals, which had been rallying, and we are seeing that. You can see the pullback recently since the dollar strength kicked off. That's gold, GDX, gold stocks, and silver SLV. We got stopped on half of our nugget position today. With the rolling over the 8-day moving average on GDX and the close below there, still holding on half of the initial pilot buy. However, Bitcoin having a rough time of it, gap down, but held the 21-day moving average. Kind of makes today's low somewhat critical from a short-term trend perspective. On to bonds now. Broad bond index BND, tight range, waiting on the Fed, up 0.25%. TLT, the long bond, up a little more than 0.25%. Prices up means yields down. Mild pullback on the TYX yields, also the TNX 10-year down 8%. Let's go now to the tail of the tape. You can pause this. Some news. Japan hiked interest rates for the first time in, this is not a typo, 17 years. So recently their stock market made new highs, going all the way back, first time since 1989 when they topped. I remember buying a car in 1989 and the dollar to the yen was an issue, putting the putting the squeeze on any import prices. Tomorrow, as I mentioned, FOMC. Extremely important at 2 o'clock. Day count, we're in a 19-day consolidation. Undercut and reclaim of the 8-day moving average on S&P is good. Second close above there. 49th close above the 21 and 92 out of the last 93. As far as sectors go, oils, staples and utilities, biotech, strong. And then Staples were strong early, but then the market gathered strength, and Staples closed basically less than what the S&P did. So by the end of the day, it was utilities, it was industrials, healthcare, and discretionary that led the way. On the downside, yields, of course, semiconductors, gold and gold and silver stocks, and emerging markets. Portfolio, the only change was the trim to NUGT, and the bottom line on the day, lunchtime rally and a strong close lead the S&P 500 to an all-time high close. FOMC on Wednesday. Let's take a look at a couple of charts. But before we do that, I want to bring up, there's a lot, we've got a lot of new followers lately, and they don't really understand exactly what Revere is and what we do and how we compare to other advisors. So I put this screenshot together, and it's a brief description of who we are and what we do. You can pause and read this, and then a description of how we differ from the traditional pie chart allocation advisors. So just pause that and go through it. I mean, I pretty much talk every video about the dual purpose of what GROTECTION does, but we're not a fund, we're not a hedge fund, we're not a mutual fund. We manage individual client accounts, and these are a high level overview of our investing rules, with risk management being number one. All right, let's get to some charts. And the chart I wanted to use for an example was AMD. Recent leader, had a big top a week ago from last Friday, breaking the 21-day moving average late last week and following through this week, but did something very key today, bounced at the 50-day moving average. This is what you want to see as part of a continuing bull market for leaders. When they pull back, their pullback should be contained right around the 10-week or 50-day moving average. If they go further below that and the slope of the 10-week or the 50-day rolls over, that's a serious sign of weakness for this particular holding. So when you see something bounce there, and this also corresponds with a test of this initial breakout level from this level. Let's see what the date was on that. That was the 29th of February. So we went up on a quick 2-week move up, big negative reversal along with the NVIDIA negative reversal. Sold off since then, got below the 8. The 80 MA rolled over and acted as resistance on any rally attempt. Finally gave it up to the 21. The next level down is the 50-day or this red line, the 10-week. They're both the red lines, whether it's on the daily chart or the weekly chart. But it held today and it stopped going down. And you can see this level, how was a key level at the top of this prior base before the breakout. So this is what you want to see from stocks that have been leading but are pulling back a little bit more. This is a more violent pullback than we would certainly like to see, but the volume is not overwhelming. In fact, only above average on that one day when we had the negative reversal. So that's a bit of a plus there, and bouncing where we need to and near the prior pivot is what you want to see. And any leaders that are doing that is certainly what we want to see. An example of one that isn't doing that is former leader GitLab. You can see it gap down on earnings and continued lower after being a leading stock during this November through current rally, but certainly given it up on its last earnings report. Another example of one that really failed through to the downside was another leader, Snowflake. You can see how this was leading the way after this breakout to recent highs, and then just giving it up on earnings and going lower, in this case even breaking the 200-day moving average. So some go by the wayside, some hold up above the 21 the entire time, some break the 21, but if they're going to have another run at it and the bull continues to run, they're going to bounce at the 10-week or the 50-day moving average. So let's see what the leaders and laggards were today. I already showed IBIT, small 2% position on this, but did drag the portfolio, being down 3.8% today. Nugget also being down almost 5%, and Nutanix strong yesterday, not today. A lot of the data center stocks pulled back today after the NVIDIA big conference that they're having. If NVIDIA named you specifically and called you out, some of them rallied. If they didn't name you specifically, they sold off. Nutanix wasn't named specifically, and it sold off today, but it undercut and held the 21-day moving average, which is exactly what we want to see. And this puts it in a prime spot to add to our existing position if the market has a positive reaction to the Fed tomorrow. Weatherford, another oil name that we own along with NRGU, continues to ride the 8 EMA higher. That's a thing of beauty. Lilly, nice day today, reclaiming the 20, or putting some distance again between itself and the 21-day moving average. Uber was weak early, broke the 21 yesterday, reclaimed it today. This is the type of leadership that you want to see, although the volume wasn't there. But we will keep an eye on this, and we want to see it. Note how it's been having trouble with the declining 8-day exponential moving average. You want to see it bust above there with some convincing strength. So what else stood out today? Dell was mentioned by name several times by Jensen Huang, the NVIDIA CEO, yesterday, and it bounced at the 21-day moving average, finally stopped going down after its uh, big gap up on earnings. SMCI was not mentioned, and they're doing a 2 million share secondary. So this was down 9% today with its first close below the 21-day moving average since this entire run that started with this big gap up higher when they raised guidance on January 19th. What else stood out today? AMD, I already showed that. Coin with the continued weakness in Bitcoin, but what did it do? Bounced right at the 21-day moving average. That makes today's lows critical because it held where it should have. A revisit and a break of that level would very clearly be bearish. Hava undercut reclaim strongly of the 8-day exponential moving average today on above average volume. This just looks really good. And GPS gap continued on accumulation, continued strength with volume. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932 if you're interested in becoming a client. Email my partner, Dan Stewart. That's dan@revereasset.com. As I mentioned, GROTECTION dual mandate. We participate in uptrends and grow client accounts. During those uptrends, things start to go sideways. We reduce exposure. It's kind of what we've been doing lately, keeping our beta closer to 1 as opposed to 1.5 or closer to 2. And if you go into a downtrend, we get the heck out of the way, especially if you break the 200-day moving average, as was seen here during COVID. Here's during COVID, and here's the 2022 bear market. Our rules just get us out of the market, plain and simple. That's it. I'll wrap up the video here for Wednesday, March 19th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.